Hello, hello, hello. Welcome to Trading Made Easy right here on YouTube. Just want to pop in really quick. Glad that you found yourself here. Let's do a quick analysis. Actually, this is what I was doing, so I just decided to record it because I study more than I trade, and I suggest the same. So what I was actually looking at was the dollar in particular. And on TradingView, you can go to the dollar index, and what it does is it gives you the diagnosis, so to speak, of what the dollar is doing, the strength and or the weakness of the dollar. And so that's what I'm looking at right now because obviously we have so much going on in the world, in the United States, that affects the dollar. And this understanding this and doing this type of analysis will help you to position yourself when you are trading any dollar pair, whether that's a primary or secondary pair. So what I'm looking at is the dollar. I am on the daily. I'm on the daily. And as we can see, without even drawing a trend line, the dollar has been what? Declining. So what that basically means is that the strength of the dollar is weak. That's all it means. The strength of the dollar is weak. And it has been on this decline since March, right? March 20th, thereabouts, right? It's a daily March 20th. So right around that time frame, the dollar has basically been on a decline. It has been on a decline. Now, obviously, we know that this is primarily due to the coronavirus and the uncertainties thereof, and all of everything that's happened as a result of that. Then, of course, we've had a major infuse of revenue into into the economy, where with the stimulus checks and the bailouts and different things like that. And though on one end it may appear to be a good thing that a lot of the companies and individuals have been bailed out, but from the dollar perspective and from the long term view, it's not a good thing because the more money you put into the economy, the weaker that money, that dollar becomes. And so we having to contend with that as well. All of these things are contributing to the overall downtrend that we see or decrease in value of the dollar. Now, right around in this area here, and what this is what I normally do on an analysis. I identify the high point and the low point, right? This is the highest that price has gone as of May, I'm sorry, as of March. And of course, this would be the low right in here that the dollar has gone, and that is September 1st, right? Now, what's interesting is right around this time frame, September 1st is when we had um, the president declared that he has coronavirus. And so, of course, that created an impact. And I'm sure that that's part of it, if not the reason why. September 1st, we can certainly look back within the short time frame. It's the 6th now, and the debates was going on around that time frame too. So this is what contributes to this downward move here in this area. And of course, it was happening as of July. It just kept going down. So when you look at everything that's been going on since that time frame, it, in my opinion, has contributed to the dollar continuing to fall. Okay, so this is what you want to identify first. What is the dollar doing before you get into the pair that you're going to be trading the dollar against? And we see that it's clearly on a downtrend, right? And what is price doing overall is a downtrend, but what is price doing right now? We're still trending what? Down. So the dollar, the value of the dollar is still decreasing. It's still decreasing. Now, because we always want to identify support and resistance because price moves within those zones, right? So we always want to be looking at our support and resistance. And so what I'm seeing here, let's just bring this down. right around in this area right here. I see some wick action going on right in here, bounce right in here, bounce, bounce, and then it pushed up, right? Then it pushed up. And then price came down right here, pulled up, came down, pulled up. It broke through, and we just been playing that game, right? So right in this area here, this price area is where price had a reaction. So what I'm looking at is for price to come back down to this area and do what? Push back up. Why? Because that's what it did in the past. Now, eventually, as I always say, price will eventually break a zone, and then it typically retests and then pushes off on the direction that it's going in. Now, the higher the time frame, and you want to always base this on the higher time frame, because the higher the time frame, the stronger the structure. The higher the time frame, the stronger the structure. So that basically means the harder it is for it to break. Now, eventually it will, but it tends to take a few revisits before it actually makes that move. Now, of course, we can have things happen in the economy. We can have, things that happen that will blow it right out of the water. So I'm just saying, typically, this is what happens. More routinely, this is what happens, but it's not 100% concrete. Okay. And so what my expectation is that price is going to push back down from where it currently is to this next structure, right? Which is 70, well, no, that's 723 pips. Remember, we're on the daily. We're on the daily, okay? Now what you want to do is drop down to the, okay, I'm sorry. We got to go over to a pair actually. So we're going to go over to a pair. So let's go with, I think I was analyzing USD chef. I believe that's what I was doing. And this is what I do. I just go through different pairs and I analyze, see where it's at, and I compare it with our simplicity trading system. And it's always on point, guys. It's always on point. So if you don't have the system, you absolutely need to get the system. But I do believe that you should be able to analyze price without any assistance of an indicator. And that's basically what you see me doing here. So now that we're on the U-Chef on the daily, so what are we looking at here? I identified my high and my low, okay? It's roughly the same as the DXY, but remember there are differences because we are actually trading it with another pair. And so on the daily, just looking at it without even putting the trend line, you can see that we are what? Trending down. We're trending down, right? And because the USD is the primary pair in this combination, because it's the primary pair, when you have a primary pair and you're trending down, what that says is that the primary pair is weaker than the pair is trading against. So in this case, with it being USD Chef, USD being the primary pair because it's the first currency, if it's trending downward, then that says that that currency is weak in relation to the pair that is trading against. So the value of the dollar is weaker than the value of the Swiss franc. That's basically what it means, okay? And that coincides with what we saw on the DXY, right? So it's trending down. So I want to just kind of just take that off just so that we can have some more clarity on the chart, right? And what is price doing right now? So we know what the trend is. Now we know what the high and what the low is, represented by the turquoise lines, right? What is price doing right now? It's trending down, right? We're still trending down. See that? Okay. So now what you want to do is identify some support resistance if you can, right? So that's what the yellow lines are for. So we have resistance right here where price came up, pushed down, came up, pushed down. It kept doing that until when? Until it finally broke out and pushed up. Now, remember, we're on the daily. The higher the time frame, the stronger the structure. So the first hit on this resistance line was August of 2020. It did not break out until September 22nd of 2020, right? So from August to September, we had what we call consolidation because it didn't break out until that time frame. Okay, so as that's an example of the higher the time frame, the stronger the structure. So then it broke out and it retested that same area. It retested that same area, and this is where we find ourselves right now. Now, when we look at the support at the low here, we see the support where price came down right here, pushed up, down here, pushed up. It did that until it broke out, but we still was in this overall consolidation, right? We still was in this overall consolidation because for support, it did not break the low identified here. It basically was contained inside the overall consolidation area, okay? And it broke to the high side. It didn't break to the low side. So that's where we find ourselves right here. So what I'm looking at is price trending down, and I'm looking at price coming back to this support area, which is roughly about 97 pips, coming back to this support area, okay? And it could very well push past that down to the low that has been identified, which is 156 pips, right? So I always go for the lowest hanging fruit because price will hit this area before it hits this area. So that's roughly about 97 pips. And what the expectation is once it hits this area is for it to push back up. Why? Because that's what it did in this whole time frame. It pushed back up. Okay, so that's the daily. Let's drop down to the 4 hour. What's happening on the 4 hour? So on the 4 hour, let's see if the price is still respecting the trend. It is. It's still going down. Why? It hasn't broken it. It hasn't broken this trend line. So we're still trending what? Downtrend. Okay, we're still trending down. Price looks like it want to do a little push up. And what I'm looking at, if it pushes up and it does not break this trend line, I'm expecting for it to come to this point right here and then have a reaction, push back down. That's my expectation. Okay. I'm still, with it being overall downtrend, I'm still looking at price pushing back down to this key area right here, the support area. So let's look and see what's happening on the 1 hour. Did it break the 1 hour trend? Did the 4 hour trend, was the 4 hour trend line broken on the hour time frame? That's what we're looking for to see. So let's squinch it in some. Okay, still respecting this overall trend line. This is the daily trend line, still respecting this trend line. We had some hits here, push down, close, push, hits right there, push, hits right there, push, right? So if price pushes back up to this area, what I'm looking for is for it to push back down. I'm looking for it to push back down. Could it break? Absolutely, it can. It can absolutely break. Overall trend is bearish, so I'm looking for a bearish move. I'm looking for a bearish move, okay? And so right now, we're still respecting that on the 1 hour. If price pushes back up around about this area here, this area right in here, which is that resistance area that we identified, right? I'm expecting it to react and push back down, just like it did here. Came to this area and it pushed back down, okay? So let's look down to the 15-minute, which is my entry time frame. I'm looking to see, was my line still respected? Is the daily trend line still respected? It's still respected. It's still respected. It has not been broken. Push-ups, 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 right? Still has not been broken. So what I'm looking for is price. Right now, price is moving up. right? This will be a correction. Okay, so it's moving up. I'm expecting for it to come to the trend line and have a reaction. Come to this support area, and I'm sorry, resistance area, and have a reaction. Why? Because I'm looking at what it did here. Looking at what it did here. Okay, over in this area here, it pushed through this support, this resistance, came back to the area, pushed back up, came back to the area, didn't touch, just the area, pushed back up until it broke out, right? It broke out, pushed back up, and it retested here, right? Broke out, and we had some friction going on, right? It came, had some friction, pushed back up. So it still had a reaction, whether it was to the high side or the low side. It still had a reaction, and that's what I'm looking for. And then it came, pushed through, push back up right here, and what? Had a reaction, push down. Came, I don't know if you all can see this, but it hit the resistance line again, had a reaction, push back down. And this is the reason why when price gets back to this area, I'm expecting for it to react and push back down and push back down. Overall, I'm looking for a bearish move, a bearish bias, because why? It did not break the bearish daily trend line. That's what I'm looking for. And that's the reason why I'm looking for that. And so when it pushes back, hits this area on the 15-minute, looking for it to come back down to around about this area, about 50 some odd pips, right? The overall structure is about 133 pips. So the question becomes, do you want the whole 133 or you want to take pieces out of the 133? Overall, that's the pot of pips I'm looking to capitalize on. And that is how I do my top-down analysis without indicators. Without indicators, we're basically looking at support and resistance, right? Your resistance line, your support line, and your trend line. That's all you need in order to do a top-down analysis as it relates to tools. But of course, you need an understanding of what you're looking at and how that relates to the lower time frame. This is the reason why I highly recommend that you book yourself a one-on-one session where I can break down the higher and lower time frame relationship, because once you understand that, you fully understand that, one, you'll never be lost in the market, and that is crucial to your success as a trader. Anytime that you are lost in the market, meaning you don't know what price is doing, you are in trouble. And I highly recommend that you don't execute a trade. But the one-on-one will give you that insight, give you that understanding, so that you're never lost in the market. You're always in control of what price is doing. You don't control price, but you're in control of what price is doing as it relates to you understanding what price is doing. And so I'll have those links inside of the description. Also, I highly recommend that you absolutely get your trading system. You absolutely get your trading system. Now, my next video, I'm going to show you the relation to what the manual or the top-down analysis is in relation to what the system is telling you and showing you. And you'll see how they all coincide together. So I recommend that you definitely get that. Access the link that I have in the description, get your system, and then certainly we can do a one-on-one and break all of that down. I go from a basic level to an advanced level. So whatever you feel you need, absolutely book a session so that we can get you taken care of. But my next video, I'll show you that, so I don't have to do this one or make it long here. I'm gonna cut this one short. The next one, we'll rock and roll. So I'll see you on the next video. Bye-bye.